Hey everyone! Okay, so here we are. It's the last month of the year. I seriously cannot believe how fast this year went. So let's talk about what happened in the market last month and what we can expect coming into the new year. So as expected, and as we discussed in the last month's update, inventory continued to drop. We saw a 33% drop in the month's end inventory, and normally it's around 11%. So comparatively, that's quite a bit of a decrease. Supply is also down 74% compared to inventory levels from 2019. So I know you might be hearing this a lot lately, like low inventory. And what that means is going into the next year, the market's going to continue to be competitive, very competitive. And we have a little over 2,200 homes on the market today based off of the data from previous years. It would be safe to bet that we could even be under 2,000 homes on the market in the Denver metro area come the end of December. So with inventory so low, the market is going to continue to be hyper competitive, just like it was this year. So now, having said that, just because inventory has been at these level of lows, it doesn't mean that people were not still buying and selling. So year to date, we've seen more homes purchased than at any other point in the last 5 years. So there's lots of inventory moving. It's just low. So right now in the Denver metro inventory, the price point between $400,000 to $500,000 has the lowest amount in inventory. And that's because it's the most competitive price range. We've got a lot of buyers sitting in that pool right there. Only 202 homes were available for sale under $500,000 last month. So the median price point for a detached home was $600,000, and for an attached was a record-breaking $390,000. Also noteworthy is detached homes sold for an average of $95,000 more this November than last November. So, wow. I mean, if you bought a house last year, you were likely sitting on a large pile of equity. And for those of you who are still looking to buy in the next year or so, don't worry. This trajectory is still going strong into 2022, and it does not seem to be slowing down. As long as we continue to have high demand with low inventory, we are well moving forward towards the same trajectory that we had this year. So if you're thinking about selling right now, it's important that you get with your agent, me, and we talk about what your home is worth based off of similar and recent comp data in your neighborhood. You really want to stick within that price range. So pricing your home right out the gate is quintessential to driving in more offers and hopefully getting you into a bidding war situation. We want to hike that price up. And this is still very possible with demand being so high and inventory so low. And if you're on the buy side right now, you know, it's really no secret that the buyers are feeling that pinch and seeing the impact of the low inventory and high demand, as well as the increasing prices. So it's really, really essential that you're working with me and your lender to have realistic goals and expectations as far as price and budget. You're really going to want to know what to expect as far as terms you might be willing to give up, like appraisal gaps or limited inspections, and really being prepared to come in with aggressive offers to get you the house that you want. And at this time, also, interest rates are still incredibly low and loan limits were just raised. So now there's a higher cap before jumping into the jumbo loan territory, which really is going to help you get better loan terms and save more money on that front. So, as we close out the year, I really just wanted to thank you all so much for being on this journey with me. And I wish you and your families the happiest holidays. And I cannot wait to touch base with you all in the new year.